investors that are starting to look at it and maybe pile in. The fund is seeing its fifth straight week of inflows. Joining us now, our Bloomberg cross-asset reporter, Isabel Lee. Who are these sort of inflows that we're seeing?
You know, it's very interesting because it's really hard to tell. You really can't tell with ETFs, but then we talked to a lot of sources and they say it's likely investors who basically don't want to miss on the historic rallies we've seen. If you recall, in March 2020, Cathie Wood's fund gained 150%. I mean, it's now down 40% as we know, but it's just the third month of the year, so investors are really hoping for those massive gains, and they're just really piling on. And if you also know, it's been the third straight month of people adding money, and so that's the longest streak in a year. So that really just tells you the conviction of Cathie Wood's fans and maybe Cathie Wood herself.
I never talk about that conviction because, dare I say it, that certainly some of the halo effect has been lost from her somewhat. I mean, the fact that she was bathed in glory, and that's kind of on the media, and now of course now the media is very quick to turn on you when suddenly your returns aren't quite so good.
That's kind of true. There have been a lot of reports that aren't the most positive about Cathie Wood, but then you can't really blame those reports because her fund is down. But then we're only in March. There's still 9 more months. And recall that the past 2 years, it's the best environment for retail investors.
There's a broader question here, though, about the effect of retail traders. And we've seen the inflows into ARK, and we've actually seen other funds where there seems to be evidence that the retail traders are willing to put more money to work in this volatile market, at least more so than what we've been seeing with regards to the institutional investors.
That's true, but then we've also seen a lot of data that shows that retail investors might be taking a back seat, and it's now institutional investors and hedge funds that are investing in the stock market. It's not the funnest thing to do to invest if the stock market is down. And right now, tech stocks in particular are suffering the most because of the high yield environment. We have the FOMC meeting next week, and they're going to probably hike interest rates. So a lot of retail investors are taking a backseat. Crypto is also down. I mean, those two kind of go hand in hand. So we'll see where
Are we still seeing those strong correlations between crypto
and ARK, you are. Well, on a day. We decide whether it's...
So crypto is behaving more as a risk asset now, so it's not, at least for now, functioning as the hedge that it touts itself.
You told me it was a store of value.
It is digital gold, people. I can't understand why the rest of the world doesn't understand. And right now it's a risk asset, hands down.
All right, Isabel, well, there's a lot going to go on next week. Isabel Lee making her debut here on Bloomberg Markets to Close, and we do have a big programming note, a big new show starting next week on Monday, the reboot of Bloomberg ETF IQ. Tune into that Monday, 1 p.m. New York time, with our favorite, Katie Greifeld, our other favorite, Matt Miller, and our real favorite, Eric Balchunas. Taylor.
So many favorites. So much competition around here. Let's get a quick check on some other business flash stories, of course, that we're following at this hour. And